So the basics of it is it's an FHA loan, right? So FHA insured loans are, in many cases, people that get an FHA loan are typically anyone that put down less than 20% when they buy a house, right? So, 203K loan is a specific FHA loan where you're able to wrap the rehab costs of buying a property into the loan. So take it another step, it allows you to buy houses that are in bad shape, foreclosure properties, distressed properties, properties that people that are looking to get into investing or looking to make a good financial decision, you buy some property with some meat on the bone. The 203K loan allows you to do that. And so the qualifications for it are just like an FHA, which is it needs a minimum of the credit score is the least of your worries on this, but the credit score somewhere is around, like, I've heard as low as 580, I've heard as high as 620. But I would advise you being over 600 at least. You need a debt to income ratio of about 50%, which basically means that your loans and like your student loans, car payments, revolving loans like that can only be 50% of your gross income before taxes. You need your down payment, which would be 3.5% of the total of the purchase price of the house plus the forecasted rehab expense. So for example, if you buy a house for $100,000, from the seller, plus it needs $50,000 of work, you would need to put 3.5% down minimum of that $150,000 loan. All right.
Okay. Where does the estimated rehab cost come from? Who's estimating that?
Cool. So, so this is where it gets, this is where you have to really know what you're doing and where it gets, a little more complicated in the sense that when you go out and you look for houses, right, and you look for houses that need work, when you do your estimates, there's a couple different things that you can do. Number one, and what I would advise now, something I didn't do, but now talking to a lot of really experienced 203K consultants, is that you should hire a 203K consultant who is basically an inspector that is certified through the FHA. Okay. And what their job is to do is a feasibility study on houses when you are looking to buy it. Basically saying they go in, they review the house, they give you a cost estimate of what the work is going to be to get the house up to snuff for the bank to approve the loan. Then anything additionally on top of that would be anything like cosmetic that you want on top of it, right? So they give you a feasibility study basically saying, hey, you need X amount of dollars just to get this thing in a livable condition, if it's not in a livable condition already, right? The second thing is like something that you really desire, like on your really important list. And then your last is like your would like type of things. But a 203K consultant is going to be your best bet on it. Now, that isn't to say if you have a friend that's a contractor or something like that, when you're going around looking and searching for properties, that you can bring this 203K consultant in. Until you're in contract with a property, the 203K consultant will just be working independently for you. And then once you go into contract, then they're working as part of the loan. They get fees based on, the way that the loan closes, the size of the loan, stuff like that. But basically, the way to figure that out is working with a 203K consultant, which is very easy to find. You just Google 203K consultants. You can go on the HUD website. It's going to give you a directory, and you just look up your state. I would only look by state, not by town, because it's only going to give the town where they reside. So go by state, look for the closest towns to your area where you're looking to buy, and their phone number's right there. Call them up, say, hey, listen, I'm looking to do a 203K loan in your area. Are you willing to come check out a couple properties with me? And they'd be more than happy to. Obviously, for a fee, a couple $100 every time they go out, or maybe you could work something out with them.
That's great advice. That's great advice, because I also did a 203K loan, and no one really knows anything about it. Specifically, if you just walk into the local bank. And so I had a lot of the problems that you had. I had no idea what was going on. I had to figure it out myself. So with that consultant, great information. Is that the best way to pick contractors, is taking their advice?
Yeah. So a couple things go into this with picking contractors. So I would say, even to dial it back, I think we skipped ahead a step. before anything, you want to make sure that you're finding the right lenders, and a lender that is super experienced with doing 203Ks, right? They are out there. Word of advice to anyone listening to this is writing loans puts dinner on these loan officers' tables, right? So at the end of the day, they're doing anything for leads. They're doing anything to make a deal. They will tell you they know how to do it, okay? And that's what I experienced. He's like, "Oh, this is easy, no problem. Our office does it."
Yep.
Come to realization when it took 4 months to close that no one in the office had any idea what they were doing. It was very. I almost lost the deal on 2 occasions, and it literally came down to the loan officer going and pleading with the guy because he happened to be a family friend of mine. And he went through it. But the first step of this is to find an experienced 203K lender. First thing you do when you're looking for these lenders is just ask them how many they've done and ask them for references. Honestly, you want to be stringent with this. You don't trust me. Again, take it from me, who had a panic attack over this thing because of working with the wrong lender. I've now met a couple of great lenders that do these day in, day out. I've met, I have one guy that works out of New Jersey. He's closing them in 30 days, which is insane. And it really comes down to that lender first and foremost. But to go back to the contractors, so yeah, I mean, you have a couple different options with picking contractors. I would say the most important thing before you even start looking at contractors is get that 203K consultant in there, because that 203K consultant is going to give you a couple things. They're going to give you a line item by line item scope of work. Okay. So there's going to be no lost in translation, communication issues between what needs to be done on the property. Every line item is going to tell you exactly what needs to be done and specifics. It'll say, retile bathroom, 100 square feet of X tile. And then next to that line item will be labor and it'll be material. And now it's going to go all the way through the list of whatever it is: flooring, walls, moving walls, repairs, electrical, all that stuff. The more specific, the better. That 203K consultant is going to write that up. They're going to give you a feasibility and a cost study. So now you're going to have numbers. You're already going to know, like, ballpark what's this going to be. Now what you can do is you can take that scope of work. Kind of what they'll do is they'll send it back to you. You can either white out the numbers, or they should be able to send it back to you with blank numbers. And now you have a worksheet. So now any contractors you have, obviously always start with personal references, right? Go to your friends and family. If they had a good contractor that they really liked, bring them on to do it. Sometimes the lender will have a list. Sometimes the 203K consultant will have some people. And then when all else fails, man, just go on Home Advisor, Angies List, one of those things. But it makes it very easy. Bring all the contractors in one day, hand them all this scope of work, takes all the guesswork out of it. Tell them, fill out the blanks. Tell me what it's going to be. Tell me what it's going to be in labor from you, what it's going to be in material from you, and hand it back to me. You're going to get leveled bids, making sure everyone's on the same page, and you'll make sure that you're finding the best contractor that way.
That's awesome, man. Great information. Great information. One of the things you and I get asked a lot is, with the 203K loan, does it require me to be my primary residence?
Yes. So with any FHA loan, the reason you're getting this opportunity to only put 3.5% down, still get a decent, interest rate, is because the whole point of this loan, the reason it came out, was to boost the economy, right? It's to boost home ownership. Home ownership is always going to be good for the economy. And then the 203K was another level of that. And it was like, not only to boost the economy, boost home ownership, but also to get some of these crappy houses off the market, right? You have a lot of people that maybe they want to move into an area, but then, they're missing all these opportunities of houses that, like in my example, it was literally a crack house. Like, it was literally like they were selling drugs out of the front of it. It was a disaster. It was really bad. And, the town was actually super happy, like made permitting very easy. That's another thing to consider, guys. Like, you're taking, when you go to the town, they are ecstatic to see that you're taking a really junky house that might be, and taking it and making it really nice. It's gonna help the community overall. So
for sure. And a lot of people don't know that.
Right. Oh yeah, and that's, it's helping everybody. It's helping your neighbors, it's helping the town, it's helping the community. So a lot of good goes into this. So that being said, investors always get the short end of the stick because they are doing it strictly for profit, whereas someone that's going into this is a first-time home buyer or something like that, or they're looking to move into a house, make it their own. That's why they do this loan. Now, that being said, I look at it like this. It's not for everybody. In my position, I was willing to make the sacrifice, live in the house. I wasn't married to an area, wasn't married to a community. The way I looked for it is like, listen, I'll live in it for as long as I need to, if I need to. And then when I'm ready to move out, I'm going to have a property that's going to be a 2-family and it's going to cash flow pretty healthily, which it
Absolutely.
now is doing. I no longer live there. And it's been doing great so far. So the FHA, the rule is you need to be there at least for a year. You have to say you're going in there with the intention of living there for a year. After that, you're kind of out of it, and things happen, life happens. You know what I mean?
Absolutely.
Cool. So, Matt, let's say like this house is just totally trash, not move-in ready at all, and you just closed on it. Is there a time limit that you have to move, or do you just have to make it your primary residence and then eventually move into it when it's move-in ready?
There's no time limit or no, it's when you're ready to go in, right?
Okay.
So, in my case, the rehab was big. I mean, mine was $100,000 rehab, so it was hefty, right? And not everybody's going to be like this. Like I said, mine was really, really bad shape, right? So the rehab took 8 months after closing. So that right there was like took a big chunk out of that year. And then very shortly after, I was able to refinance and was kind of intending to live there. And then, like I said, life happened. I actually just got engaged. Me and my wife wanted to. Yeah, thanks. Well, it was back then. Now we're married now. So
okay.
That story worked out well. Yeah. But yeah, we moved in together. We were getting ready for the wedding, everything like that. Moved out and very quickly actually filled out both of the units and rented both of those out. Cash flowing very well with them. So there's no time limit with you getting in there. Again, you're going into this. You're going into this with the knowledge that you're going to be in there, whether it be for a short time, long time. I know this podcast is based on house hacking. I mean, this is the best way to live for free, man.
I agree.
I didn't have to, even, the short time I was there making that my residence, I didn't have to pay a mortgage. My tenant covered it.
Absolutely.
I had maybe like $200 or something like that, like on the top. But
right.
Who would love, to live in an awesome area, 3-bedroom for $200 a month? It's a no-brainer.
Absolutely. So I get this question asked a lot, specifically people using FHA loans or 2 or 3K loans. We're in such a hot market, right? And there are a lot of